Morning, everyone. This is Ryan Edner with your Tuesday, November 28th morning wake-up call. We have grain slightly higher across the board here this morning. Once again, we'll start in beans. That's where most of the news has been for a few weeks. Beans up 8 at the time of this recording. Two top concerns in overnight trade this time would be slow Brazil planting pace, along with, of course, again, talk that China is about to buy 5 to 6 cargoes of U.S. beans. We'll mention the Brazil planting pace is still at 74% when 84 is average. So that'll get some in trade thinking lost acreage. Maybe some of the acres will never actually end up getting planted, and some of the acres will be switched to something else or just plain lost. So that is a concern that's being talked about. Also, of course, like we just mentioned here, conversation that China might be in for buying 5 to 6 cargoes of beans. In the big picture of China might be buying type of rumors of 3-4 weeks ago, we heard rumors of that, which resulted in nothing. And then for one solid week, it did result in quite solid bean sales to China. And then since then, it's slowed again. I mean, last week's total weekly sales, 970,000 tons. That is slightly below normal for the fall time frame. So as normal, when it comes to China buying rumors, we'll just wait to 8 a.m. and see if anything is reported there. On the Commitment of Traders report that came out yesterday, delayed a day, funds were sellers of 6,000 beans, so they are not that active in beans, and that report shows that they continue to not be that active in beans. Switching over to corn, March corn did make new contract lows yesterday. It seemed more of a drift lower than any active selling that could be seen. We will mention that now on a new move to new contract lows, we might find resistance on the next bounce at a slightly lower level. We had been seeing it in March around 495. Maybe on the next bounce could be expected closer to around 490. We will say that while corn has drifted lower and funds on the Commitment of Traders report were sellers at 22,000, the fundamental side is actually improving just a little bit. We now have 2 solid weeks of exports in a row. Ethanol also remains slightly on the strong side. So not a lot on the supportive side from fundamentals, but at least something. It is slowly improved over the last 2 weeks. So we'll see how much more fund selling there's left to go. The funds being short 186,000 in corn, that's 58% of their record. So building to a moderate size short position, slightly aggressive. Nothing huge just yet, though. And lastly, switching over to wheat now, exports have been poor here the last 2 weeks in a row. And that's with U.S. wheat at a lower price to importers than EU wheat. So a little bit surprising there, and a little bit of letdown to not see exports improved. The good to excellent rating for the hard red winter wheat, up 2% again to 50%. So that may continue to supply light, consistent pressure on the wheat. Now, we do see wheat higher overnight, but that's most likely due to the fact that both Chicago, KC, actually even Minneapolis wheat, all making new 2-year lows yesterday. So some sort of a technical bounce back off those new fresh lows is expected. But again, unless the exports can return to a little bit of a stronger outlook, then probably still looking at a grind lower there. Switching over to cattle, an active selling day yesterday started in the feeders. In fact, the fat cattle during the day at 3 separate times attempted a bounce while feeders were lower. But once feeders moved from $2 lower to $4 lower, that was about all that the fat cattle could withstand, and eventually did at the follow feeders lower. Feeders finished the day $6.50 lower. So again, while there wasn't direct bearish news for fat cattle, anytime you're going to see feeder cattle down 6, you're not going to see fat cattle higher. It will follow that move. The morning box beef was higher yesterday, but unfortunately the afternoon box beef was lower again. Choice down 78 cents, select down 96 cents. So we can't make the case that box beef is recovering. We would still instead call it sideways. To cause some of that feeder cattle selling yesterday, there was talk that cash feeders traded under $210, which is a significant setback on yesterday's feeder cattle trade. compared to the previous week. And even at 210, if that number is true, it is still almost $3 under what futures have factored in. So even after a $6 slide, the talk is that the cash is trading even lower than that. So we do have a 7,400 lower show list. We do have sideways box beef. But for this particular week, feeder cattle might be the lead influence over fat cattle again. We'll see if we get any starting bids, starting trades here today. Otherwise, let's be sure to keep a close eye on the feeder cattle. One note of surprise for cattle. After last week's slide, funds were only attributed to selling 2,392 contracts. Very small selling. So it was another week of a setback where we may have thought it was active fund selling. But the Commitment of Traders report yesterday showed that it wasn't, that they were actually only light sellers. So they are still long 39,000 fat cattle contract. They were looked to be light sellers yesterday. Again, this cattle setback looks tied more to a lot of fundamental factors than it does to fund selling. So that's what we have here this morning. If you have any questions, give our office a call or visit us on the web, allendale-inc.com.